so the reason I thought of bringing you two together is I somewhere feel that your journeys have, a lot of similarity and a lot of learning to be shared with people. Both of you started your journey in different areas, sectors, but you were entrepreneurs, you had your own startup, and then now you have moved into the VC world.
Being a founder earlier, right? You know that it's not a quick game. It's not, it's not the shiny buzzword that I joke about this all the time. I said, Pele, everybody in India wanted to be Shah Rukh Khan or Amir Khan or one of the stars, right? And now everybody only talks about being a startup founder like Vijay or, one of these guys. So I think it comes from having seen that. And now suddenly startup world is so cool that everybody thinks that they're going to be it, not realizing that actually entrepreneurship is a long journey and a very hard journey.
When we start off, we cannot aim for something where there will be an outcome waiting for us. The outcome has to come along the way. It has to evolve. So we do not know this evolution journey, how and when, where, how it will happen.
And how did you get into becoming, why did you want to become an investor after founder? Because, by the way, I used to meet VCs, I used to call it the dark side. I was like, I will never go to the dark side, and interestingly, I'm sitting on the dark side now as I joke about it. But what got you to your journey? And I'll tell you a little bit about where I started and where I went.
Sure. Love to hear about yours. For me, this is quite simple. I mean, so I came to Singapore to start a business when there was none, in terms of no customer, no employee, no office. I just had seed capital from my investor. And that's where the journey started off. And in the 10 years time, we built up a fabulous business. We never expected that kind of an outcome. It was rocking. It was generating cash by the minute and the hour. And we had more. And so,
what was the startup? What did it do?
It was a B2B fintech startup.
Okay.
But those days, even fintech was not even a word. That was in the industry.
Yeah.
And this place, basically, there were a lot happening in terms of the insurance industry is what we used to mostly address, and also the niche areas of banking when anti-money laundering, etc., were becoming the order of the day.
Yeah.
And so those softwares were a huge need for the system. But then in the next 10 years, we had a very successful run. At the end of it, we became sort of a victim of our success kind of thing. On one side, clients started getting worried about, like we are owning every other software in their bank or in the insurance company. And so it was too much of a risk on a single vendor. On the other hand, our stakeholders wanted us to do much more outstanding work and much more, which is more towards like a PE kind of thing. They were like pushing us towards getting into things which we could surely see that is a disaster recipe. Markets where we have no wherewithal to conquer, they want us to be there. I mean, acquire companies which we will never be able to assimilate. So those, I could see the glass is getting half empty, and that's where I sold all my stakes, and then I left the company, and then that's where I decided that it's no more making startup that great order of the day. The time and tide that I am now living in 10 years later, after having run a startup as an operator, I now need to probably back outstanding entrepreneurs, founders. And that's where, I have a better chance of getting a glimpse of what's going on in this technology-led disruptive innovation space of ours. And that's where also why this space is, because this is the only space, even today, I think it's the only space that is really doing some game-changing stuff, creating some outstanding value. And if you can play this space, maybe even less than half as well, probably you will make much more wealth than any other asset class ever that has come out in this world, whether it's real estate, gold, listed stocks, and so on and so forth. So for investors, this is a real great space to get in, but they have very little opportunities to get into this space unless you are really fabulously rich and you can write 5-10 million checks on an illiquid asset and stuff like that. And that's where the last part of our journey here is to how to democratize VC investing, tech VC investing for accredited investors, non-institutional accredited investors. So we don't take institutional money. So that's how it has been a complete different play, cross-border, outstanding destinations.
Yeah.
At the same time, non-institutional money, trying to democratize investors' journey, accredited investors, non-institutional accredited investors' journey into the VC tech space. So that's the thing what led.
What side do you like more, the VC side or the founder side? Although, I tell everybody this, I'm like, I don't feel any different. I mean, we started a fund, right? But I'm still a founder. The only difference is I'm running this now, this is my startup. So, but I got to ask you, which side do you like more, the founder side or the VC side?
I think that's a very good question. And of course, the VC side. Why? Because of two simple reasons. One is that every day you get to meet so many new people who are trying to do something impactful. And that's an amazing journey. And since we do cross-border, we also get a very fantastic view of the common denominator, where what is happening really. And therefore, we could very easily distinguish the meat from the reality. So because our space also have a lot of meat. Imagination is one of the cornerstone of our space. I mean, a lot of things that we think technology can do, today technology is not ready yet, but it will get ready anytime soon, and sooner the better. So that's where, that makes a fabulously more interesting journey than being a startup founder. Your spectrum is much wider. You are covering much bigger. And the way, as you said very rightly, I think really that resonates the same way we think it. While we are a VC, I would rather like to think myself that I am a startup. The difference is that I am not an operating company. I am not an operator. I am a investor in startups. That's the only difference. But the mindset is entirely that of a startup and not of a venture capitalist. And definitely not of a PE, where I try to sit around the table and try to tell you how to do you backseat driving.
I'm sure there's some good PE investors that don't do that, but whatever. So let me tell you really quick about myself. I actually, I started with the Clinton administration helping female founders raise money. This was long time ago. And I actually never thought that life will come a full circle where I'll be doing this, because, it seems so far away. But the thing was being able to see, and that's the thing we're breaking even at She Capital, is when you see role models and fabulous role models, I think it changes your life without you even realizing it. So when now people ask me, where are your turning points in life? I realized that actually maybe that was a turning point or a cornerstone, because maybe somewhere deep down inside, I wanted to be them. And so I started my first company post, working for a couple of companies in the US, which I sold to the US market. Then I came back and set up an internet company in India called MyDala. Which has been my claim to fame. I was one of the first few internet female entrepreneurs, and in doing so and being the token female, I talked a lot about female entrepreneurship in India. Tum baithe hote ho global panel pe, the first thing people ask you is, okay, how's female entrepreneurship in India? And then when you start looking at the stats, you realize that it's so dismal. And it's something you said, Debneel. It was about kind of like giving back into the ecosystem, right? At some point, you look at yourself and say, where am I making an impact? I'm doing this startup, I'm sitting in a silo, but what's the bigger impact that I'm having? And so, honestly, it's been the toughest journey, having to do a fund that's on a thesis that hasn't been proven, which was women. Every time you talk, people are talking big business around females and gender, and there's all this hue and cry, but And there are all these studies that show that women do return more money on the dollar. But we're still out proving that thesis, and we're seeing a lot more happen in the last few years. We've been fortunate. We've had great investors back us. We've now started to give exits on the fund. We've got some fabulous founders, and it's been all good. It's been interesting. But unlike you, if somebody were to ask me, would you rather be a founder or a VC? Man, I miss my founder days. Like and I tell my founders, I said, I'm so envious. Enjoy these times. When you're cribbing and bitching about this and that, enjoy these minutes, because you don't know. I mean, especially the hardest ones. I know it sounds really hard that when you're down in the trenches to look at it, but those are the things you remember. That imagine the time when we had this and how tough it was and how we managed to get out of it. That tenacity that comes through it, the grit that comes through it, is what you'll remember on your later days. So but in a ways, I think there are a lot of parallels. Like we've always told our founders to, we're founder, I hate the word founder friendly, because we feel like we're right there. We are founders, we get it. And we've kept a very hands-off approach. Our thing is very simple. You want to help, ask for it. Otherwise, we know that you know your company the best. So, and we've had, just like you, we've had investors. So we know that this is, the distance we want, and we appreciate and respect the founder. And then if they need to come back to us, we come back. One of the things that we stand on in the cornerstones of this entire, fund is, do not waste a founder's time. And this was one thing that used to irk me when VCs used to come to me. They'd be like, can you send us this projection? And my whole thing used to be, if you're not interested, why are you asking me for this? So our thing is very simple. If we don't think you're a fit, we will tell you right up front, as soon as we can, because we just don't want to waste your time. We realize the founder's got so much going on that we just refuse to waste your time and, do that. So that's pretty much it, us in a nutshell, and me in a nutshell.
Right. No, actually, surprisingly, there are so many things that we join the dots together right from the start of this conversation. Maybe I'll take you through some of these, like in this last piece that you talked about. That's again another thing we very much believe in. First of all, we are today come to a stage where there is almost, we see about 300 applications coming to us in a quarter.
Yeah.
So, and 250 of them almost like they fall on our lap. They where we are the lamb and they are the lion, they are hunting us, And for me and my team, one cardinal rule is that we must see all.
Yeah.
And we should not pass anyone without seeing.
Yeah.
But we should not waste not the founder's time, and more importantly, even if you don't care about anything else, our own time. So therefore, we have to be very quick. And we have to, at least this much we owe them, that we must let them know that we are not doing them. And if we are doing them, then we should move quickly with them. And then when we are moving quickly with them, we must come to a quick conclusion, because once we have started moving with them, it doesn't mean that we will end up investing in them. There could be so many things along the way which we may find that doesn't match. And then we should call it a day rather than procrastinate. So the cost of procrastination, even if it is much more than even taking a wrong decision. So I rather be on the side of error of omission rather than, I am on the side of the error of commission. So that's the way we try to look for it, and then quickly come to a decision, and then tell these guys whether we are doing him or not doing them, rather than wait there and see, oh, who else is coming? Can you tell me? So what about the new sales? Did Google give you that POC that you were looking for? And this kind of stuff, right? So or rather tell them that, maybe next time, maybe we are not there yet and ready yet. So let's KIV, and then we follow through. So that's very crucial thing that we again look for while we are doing it.
You do.
And then you said,
sorry.
Yeah. One last thing is that when you also said, unproven. So ours is a lot of experiment which is unproven. A lot of people ask me, how do you even do US, and how you do Israel sitting in Singapore, or why are you even in Singapore? You should be in Israel or in US to do them. I said, but that's the 75-year-old startup cliche that has come out of the Bay Area. You can only do 100 miles. But in today's world, if you're still doing 100 miles when the world is flat, then where are we going in? We are still in the red ocean. How are we then venturing into the blue oceans? And that's what we are trying to do. And much of it is not proven. So there is one set of people who doesn't like, because they always ask me, "Kisi ne kiya hai kya? Has anyone done it before?" I said, that's the fun of it, because nobody has done it. Therefore, we have a great chance of doing it. So that's again another thing that you spoke about. I think resonates with us as well. We are always trying to do something 0 to 1 and look for 0 to 1 investments, look for 0 to 1 investors, rather than many of the same and the same of the many investors. Anyone who tells me, kitna doge, kab tak doge, how much and by what time, I'll say, no, I don't think we are the right fit for you. You go and invest in Bombay Stock Exchange.
Okay, let me ask you this, because you've been doing such active cross-border, right? And we haven't right now. We've been looking at companies, but we haven't gone cross-border. Is there any difference that you're finding in founders, in different geographic regions? Are you seeing any difference?
Very much, big time.
Yeah,
big time. I think let's take with America, where we have the most of it. The general, again, this is more generalization. There will be always outliers, exceptions to the rule. I guess the founders out there, at least the ones we are going in. Again, I'll tell you why maybe just quick one I should say before this, why my investor journey as a VC is more interesting than even the startup journey, is because most of the cases we land up investing, we have to really beg to get a foot in the door, beg to get invited to their parties. Generally, the standard question a startup founder or an entrepreneur will ask us is that, why should I take your money? We have enough money. What can you bring to the table other than money? And that's where you have to sell yourself. It's not that because you can write him a check, he's willing to take your money, or you have a free flow in the party. So with that, when I look at these startups, when I look at the American founders, most of them, they are there for a very different reason. And that reason, generally spoken, if I just can put a simple tagline, they are playing it to win. They are not afraid of losing, failing. That's a very different mindset. I think failing as a culture, which looked down upon in most part of Asia, is still persists. And therefore, we are always looking for doing something which is more in the commonplace. Everybody can understand, everybody is playing into it. So therefore, we are in very narrow corridors. And hence, our chances of even making a success happen, even if we succeed and even if we succeed, the chances, the successes will not be outstanding. While in the US, at least the ones that we have all gone in and invested in them, they are mostly trying to do something really game-changing. Even if it is not fast mover, they are the few first movers. And each one of them, they are so holed up in what they are doing. They really, they can go through the shit to figure out and acquire those hard skills that are necessary to be successful in cracking those hard problems. So that's a very different mindset.
My God, what an interesting, deep observation. It's such a profound observation. I mean, seriously, you're right. Asia, failure is still not, startups have become cool, but failing is not become cool,
Exactly. It's a big problem. In US, if I have not betrayed your trust, Anisha, I can fail in this venture and then go back again to you, and you will give me money again.
Yeah.
And in Asia, not just us, even the investors are so worried of failures. And most of the times I'm seeing in Asian investing community is actually backing up a startup which should have failed long back. They don't let startups fail and fail fast. They back up a startup just because they have to write them off.
Yes.
Which is not the case in America at all. I mean, the big boys in town, they will not even blink their eyes to say that if it is failing, let it fail, and let it fail fast, rather than we waste our time trying to shore it up something that is not working. But most of Asia, this is what is going on. And the bigger the investors you have in your cap table, they will not let you fail. They will somehow keep you going. And in the process, what you are basically backing up is a failing business, a business without a business model. And you just blowing it up, hoping somebody else will take it up from you and give you that parachute, golden parachute that you need to exist as an investor. That's a complete disaster.
It's such a deep observation, because it is true. And, I think you're calling the emperor as it exists right now. But yeah, which is true. I mean, a lot of times we're like, why, it's like that old lady that swallowed the fly, that swallowed the, rat, cat, everything after that to keep ensuring, because it had to be one thing after the other. This is true in this case, when it comes to a lot of the startups we're looking at in India too right now, right? I think they can't fail because it's not so much the business model, it's really so the investors have too much riding on it to let it fail. And like you rightly said, I think the investors are doing themselves a disservice, but I think you're doing the industry at large a disservice as well,
Exactly.
right?
Exactly. More than what they're doing, investors doing to themselves, I don't care. But
Yeah.
what you are doing is basically a disservice to the whole community.
Yeah.
As a result, you are actually making such letting the community earn such a bad name that new investor money will dry up, particularly the non-institutional, which we have to bring in. If we have to make this really be the order of the day, it is the accredited, non-institutional accredited investors, the high net worth, ultra high net worth. These people need to get a play over here. But if you keep doing things like these, they will essentially get a cold feet, and the whole traction will fall through. It's like the same way you look at in India, according to RBI data, 90% of our assets are all in non-financial products. So they are in physical products, gold, real estate, and all that. And that's what RBI is trying to grow. And if you look at comparatively in other places, like in America, it's just the reverse. It's almost like 70–80% is in financial products, from mutual funds to all the way into the private market. Is
that the reason that you haven't really looked at India as an investment thesis? What is it?
Yeah. It's still not ready.
It's still not ready, according to you.
Yeah.
So here's my thing, right? For the last 2 years, I got a really tough, my investors were really, because once you've raised money, you started calling your closes, obviously everybody wants you to deploy, and they're hearing, the problem is there was such a hot buzz in the Indian market that everybody kept saying, why aren't you deploying faster? Why aren't you deploying faster? And my thing was, the valuations did not equate it, right? Somebody coming here and asking me for a 12x on rubbish revenues is getting nothing from us. When you don't have a model that we know is not going to scale, plus you have nothing to show for it, I'm sorry, there is no way we're going to give you that valuation. And so it's exactly what you said. We went really slow, and now we started going fast. Interestingly, when they're saying the market is slowing down, we've picked up speed. We're just closing out 3 transactions as we're speaking. So it's quite the reverse, but it was actually this. It was this that I just didn't see the worth in having to pursue companies that, had bloated their valuation so high that the only thing for them was the value game. It wasn't about building a solid business. And, I come from the old school mindset. I grew up in a business family. I built businesses that made money. So I never understood this, where you were building value to get your next valuation. At the end of the day, you had to have a solid foundation. If that didn't exist, it was a little scary for me. And so we were seeing a lot of that come through. And now, thank God, I think the market has had a shakeup. So we're seeing a lot more solid businesses come through with a lot more realistic valuations and real business models. So we're hoping that changes.
It will surely change. Yeah, it will surely change on that. I would rather like to add a couple of stops on top of that. Is that first is that do not get driven by time pressure or deal flow pressure. We have to always remember that the error of omission is much lesser than the error of commission. The ones that you write check, make sure that they are out there to make something happen there. And that's all not about the idea. It's about the mentality, the psychology, the realism, the imagination of the team, their hard work, their hard skills, and so on and so forth, why they are together. So those are important. And again, we are not in this business where we are buying burgers at McDonald's. And this is not a McDonald's business where we can just cookie cut 500 franchises in the city of Delhi, and then we will be flying in, we will be off to flying colors. No, so this is where you don't even have so many great deal flows. That's something we have to keep in mind. And then the final step here is that, Anisha, we have to remember that most of these that we will invest in will still not work. Despite when we invest, we have all the check boxes of a unicorn and a decacorn and so on, but they will not work. They will fail. But then a few among them will be a hit to the fence, and then some will be home run, and then probably one will be a jackpot. But the day that jackpot arrive, Anisha, that day you must be alive. I must be alive as an investor to reap the benefits. So this game is a longevity game. And this is not a quarter-on-quarter game. Therefore, we have to survive 10 years. So first, make sure that you are out there at the end of 10 years, when I'm imagining that there is no stock market. And at the end of 10 years, one or two of your startups, they go and list themselves in New York Stock Exchange and in NASDAQ. And then from there, they built up a franchise, which is one of the most powerful brands of our time, like Apple, like Tesla. Knowing very well that brand will not produce phone anymore.
Than the founder in me. So, that's another thing that I've had to really work on as an investor. As a founder, you're always impatient. As an investor, you have to be extremely patient. And I never realized that nuance till I came to this side. Okay, because you're constantly running, and here you're constantly waiting. And so I'm hoping that we get to it before 10 years, what you said. So from your lips to God's ears, both of us, before 10 years. In your case, it's already happening. So, and I think we will. I mean, I'm seeing the Indian market and the pipeline that we're seeing is just, there's some amazing, cool stuff coming out of here. It's just a matter. And there's solid, now there's solid founders coming through. I think they've seen a bit of the downturn. I think survival really teaches you, if you made it through some tough times, that's when, your real value comes through. And now we're seeing founders like that, who've gone through one of those punches, haven't got knocked out from COVID. Now a downturn they think is coming. I actually think it's a great time because it's just a reality check, nothing else. So we're excited to see where this is headed, in general.
No, I'm very sure that this will come.
Are you seeing this? Everybody keeps talking about winter's coming, and that's all everybody's talking about, right? And so we're seeing a lot of this happen here. Startups are going crazy. People are calling me nonstop, and everything is for either a convertible round. And even if you ask them why you've got so much money in the bank, why are you raising? They're like, winter's coming. Okay, and in my head, winter's not coming for companies that have been humble and run on a tight budget. Winter's coming for companies that didn't turn a dollar on a dime and now have to prove their worth. That's my thing. But I'd love to know your intent, because you're working with all these global startups and you're seeing this on a global level and a cross-border level. What are you seeing actually?
So firstly, spot on. I completely copy your thought process. One is if I look at the macro side, but then I'll come to the macro side in a minute. More as our micro play. We are a bottom-up curator. So I would imagine a little that I know of you guys are as well. So therefore for us, it doesn't matter. It's all matters is that where we are putting our money. And then we are not in an envelope pushing business. So that means we don't have a quota of doing 5 because we have 5 million in our bank today. So rather we have to find that right deal. We have to get to that right founding team who has that skills to make that happen. Now, if this is what we are looking at, it does not matter where macro go. It's all about bottom-up curation, where you are putting your money. And this narrative is not just for our space. It's also all the way up to the listed space. Like in India, you will see there are 5,000 companies listed in the stock exchanges. Yeah. But actually 4,500 of them are not investable grade at all, because they probably do not have the basic criteria that an investor is looking for. And then from the remaining 500, you will see probably there are about 25 or 30 companies who are generating free cash flow, which is more than the cost of the capital, which is normally in India today is at about 12 to 15%. And this has to be done consistently, not 1 year. So therefore, your universe is not 5,000, your universe is just 24 companies. And in those 24 companies, we are not the only smart ones who have found them out. There are smarter guys than us who has found them out. So they are pricey, they are expensive. I rather pay a good price and get to a very smart company rocking from all cylinders, generating what is necessary. So the top line is vanity, bottom line is sanity, but the cash is the reality. A company who just doesn't generate cash flow is nothing to look for. The same narrative, only our industry, what happens, it just gets pushed out. In a listed space, you see quarter on quarter, last 10 years, here we work towards getting that monetization coming 5 years out or 3 years out. That's the only difference that has happened. Now, if that be the case, in that case, macro does not matter. For so long, you are not a cash guzzler. For so long, you are not spending your capital to buy the top line. If those are the kind of businesses, then in any case, they are not, whether it's a sunny day, it's a spring or an autumn or a winter, they're not to be touched with a barge pole. How does winter make it different? Rather, winter is such a good thing. Even look at it this way. Now I'll flip it around. It's such a good thing. Let's assume winter is coming. Then we will get things for a song. Companies who would otherwise not let us in, saying that, who the hell are you? Why should I take your money? Oh, Mr. RJ is investing in me and Mr. Tata is investing in me. Why should I take your money? Those companies will now come and take our money. And that's where
I completely agree with you. Now, are you seeing this happen though cross-border, like US, Israel? Is it the same thing that you're seeing resonate everywhere?
Pretty much. So there is a lot of noise because we all get, we still, unfortunately, our world still reads a lot of Bloomberg and CNBC and BBC. So therefore, they are the merchants of fear, right? If they don't sell fear, their TRPs won't go up, people don't pay their subscriptions. So if you can't stop reading them, then you will always be fearful. It's good to be fearful, but not this fearful. When the whole street gets fearful, we need to get greedy, right? So therefore, these are great times to look for those outstanding investments that will come to us at this time, not just for they may be doing a bridge round just because they think there's a winter. And that's where you actually get a foot in the door. And you get at maybe a 30% or a 25% or a 20% discount to the next round in a company where otherwise in the spring or in autumn or in summer, they would have said that, sorry, we are not raising.
No, I said I have no ego. If I love a company,
cash is the king.
So
cash is the king. If you have the cash, this is the winter is the best time to deploy.
No, I agree with you, but I wanted to know if startups across the world were feeling that way, which is winter is coming, and everybody's chanting the same, chant globally, which is a little.
Yes, they are. But then if you really see startups who are doing some real good stuff, I think they're not so much bothered about doing a round immediately to fill up a war chest. It's only those who are burning much more and the business models are weak, feeble, not that producing results, or the monetization plans got delayed. They were happening. On the other hand, like recently, we had a space debris removal company we have done in Irving. They were almost like 1 year out from revenue, but then they got revenues just now. So almost like 15 months prior to the schedule. And these are very credible revenues. They are coming from very large space agencies and defense procurements. So these guys are now raising a new round to further expand and to spend. So these are good things to do, which again, whether it is winter or summer does not matter. So those are what we are also seeing in a big way.
Hey, so, because you're talking to companies globally, right? Which are the ones that I know US, you said, is doing really cool, innovative stuff. Israel, everybody talks about. I've got friends in Israel that have done some really cool, innovative stuff as well, right? And given that they're small, but they're just out what are you seeing? Like, who are the founders that just, are going to crack it? Estonia, Israel, where do Indian founders, and we got to say it because we're Desis, we have to bring this up. Where do Indian founders stand in this innovation poll? And I'm saying innovation because, I do believe you got to keep innovating to get to, just phenomenal companies, and that's what we are trying to back, is just innovative models that are solving a problem. And I see that you all talk similar in terms of your lingo, but what are you seeing a difference in terms of Desi founders and a founder from Israel, Estonia? What can you just talk a little?
So first of all, the Desi founders, I think they stand out in one clear thing, which is called the street smartness. That's something we are all product of. I mean, the one thing that we can really be very grateful about what India has taught us is the street smartness, the jugaad.
Yeah.
So no one can beat us on that. I mean, no matter where you go. Although we have done very little in India, and some of them that we have done even have got actually foreign founders. We have done a lot of Desi founders outside India. And like in Singapore, almost all of our investments are Desi founders. So we have backed a lot of Indian founders here. And then our main aim is to push them into America. And we have been able to do them successfully. I think where we lose out is that we get chickened out in making things very big. And at the first call of success, and for the first call of the basking of the glory, we try to probably flip. And that's where, it becomes less attractive.
What do you mean by that? First call of success, you try to flip.
Meaning there's so I built the business from nowhere. And now somebody, so I have maybe, let's assume a 5 million ARR.
Yeah.
And somebody is willing to give me a 75 million on that. I'll rather flip and go. That's where the Desis lose out.
Interesting.
Where as compared to that, I give you another very similar, different example. And in that, we investors are also equal culprits, the Desi investors. We will rather, we came at 5 million and now 75, let's flip and go. But look at very simple things, Snap. I'll give you something you will immediately relate to. This guy got a $4 billion offer from Facebook in 2013.
Yeah.
He didn't. Facebook got Instagram thereafter. Everything almost Snap was doing went there. So when they could not buy, they went out to kill this guy by making their own product. This guy suffered very heavily, and I've gone through that journey. So we had investments in Snap for $7, and you won't believe it. It went up to 26 on listing, and a lot of people tell me that I'm a clown. I didn't sell, so I stayed on. It fell down to about $4 or thereabout. And then we went through the whole journey. This guy, because I was very, very much amazed by his guts. He has balls of steel. So, and his investors also let him do that. They realized that he has balls of steel. Otherwise, if there were any other investors, Asian, European, we'd have bundled him out and take him to the cleaners and wood house to the wood house and got him sold. But they even still
think I would have been the culprit saying, bus bahut ho gaya, chalo, okay, enough already. So I absolutely, and
but then
back to that point, what you said, earlier about being fearful and failure.
There at $64.
Yeah, nice.
This company is more than about $40 billion in worth. So he almost took the company in less than 10 years, 10x.
Wow. Wow.
Where he had a brilliant offer on the table, which he rejected. This is that gut that is very much missing in Desi founders. While on one side, we are extremely street smart. We really know how to pick up the patli gali and make it much faster than anyone else. But then no wherewithal to stay on stay on and face that tornado, and then come out the other side brighter, better, stronger, and richer.
Sometimes it doesn't work that way, right? And I think the fear of the aunties.
Why sometimes, Anisha, I will say most of the times it doesn't work. But then It's all about the few times that it does. It's our journey is about the few times, right? Not
I
about the
agree
most.
with you. It's about taking those big swing to the fences. If you know you can swing for the fences, brilliant.
Why
So
we like Estonia and Israel? Like in
Hmm.
Israel, we are very selective. Israel is a lot of mixed basket. It's a melting pot. Like we have never done food, etc., which Israel is very good at. Rather, we have done cybersecurity, and so far, and things can change anytime. We are learning by the fly. Every morning, we tell ourselves we don't know. Let's go and find out something new so that we can go to bed tonight, waking up tomorrow wiser. So let's figure that out. So we are learning along the way. I think from all that we have seen around the world, best cybersecurity work is happening in Israel. And that's why you will see most of our portfolio is all cybersecurity in Israel.
yeah.
And that's where someone like last year, one of our cybersecurity companies got acquired by Cisco for all cash deal 3.3x. And it was less than 2.5 years for us.
Nice.
It's an outstanding outcome, you would say. But to me, if
Uh,
this company was not acquired by Cisco, in one more year time, this would have been a unicorn. And probably in another 2 years, it would have been decacorn. So I would have got double from 3.3, 6.6 in 1 year. And maybe in another 2 years, I would have got 10x. From 3.3, I would have got 33x. So this much of the opportunity, I lost it. So that's really a bad outcome for me, if you really ask me. You might say, oh my God, you are so greedy. You get 3.3x in 2.5 years, still are not happy. But that's the outcome we are playing for. And that's where we need founders who are long play, who are willing to stay there for all that it takes to make it happen, to go through that shit and then finally give that great outcome to himself so that he can have his whatever Ferrari and Lamborghinis, and we can then have probably a Porsche.
I listen, I'll tell you this in itself has been kind of like even for me, right? A lot of the stuff you're saying is true. I'll always err on the side of caution, right? You always say to yourself, I mean, it's very similar. We did the 3x exit, actually the 4x exited under a year, but I'll tell you this, and I was super happy. Now you're making me just feel bad about it because you're like, listen, we should have swung for the fences. No, this is great. This is brilliant. I'm so, it's definitely a mindset, and I think yours is more so like that because you're seeing different things and you're taking larger chances because you're playing in a different pool. And I think it's very interesting because it is a deep insight. We should all be looking at, and that's how it's going to mature, the tech ecosystem, right? If we are all trying to take those bigger bets, if everybody is doing the same thing over and over again, then where are we going to innovate? So
Exactly. So we have to get off the beaten down path and go to roads that are seldom traveled.
Yeah.
And in these seldom traveled roads, we need to find a few of our community and join them.
Yeah.
It's a lonely road, but the value is in the lonely road.
So what, like everybody's excited about certain sectors. What do you guys invest in? And so we're sector agnostic, right? We invest in anything that we think is exciting. Okay. And it could be, and I tell startups this, it's very personal, right? What could be exciting for me will not be exciting for another VC. What's exciting for another VC might not be exciting for us. So, but what do you all invest in, and what are some of the things that you're absolutely loving right now?
Right. Again, we are agnostic. We are stage, sector, geography agnostic. We rather look at the basic technology platforms, being a tech investor. And that's where we try to go for a complete play of the main verticals that we see are going to be game-changing, high impactful for the next, say, 7-10 years, 5-7-10 years.
Yeah.
And within that, so that's the macro. And then within that, we try to see what can come up. For example, where we haven't been successful, we feel Web3 is a place to be, but it is fast evolving. We still do not have much of an idea of how the contours even will look like. It's in such early stage of infancy, and we haven't found a good Web3 company. But we will wait forever for as long as it takes. So as we alluded earlier as well, the most important play in our this life journey, the current avatar that we are in, is patience. It's not the curiosity to know. That's the number one in investing. Courage to act. The number two is this is not about bravado game, but it is the patience to wait after you have acted on your curiosity.
Yeah, yeah, yeah. It is true actually. The baseline of everything boils down to whether the founders interest us, whether they are, for the lack of a better word, I've always said this to everybody, reflections of what we want as founders or what we've seen in ourselves. I don't know how to better explain it, and I've tried to put it in words, but I think really, and I think Debneel also talked about it, but really it is the founder that is going to make the company. So the founders are going to make or break the company in the end. So that for us is absolutely key on, whether they're able to do that and their flexibility, right? I mean, there is going to be so much rubbish that comes your way along the journey, and whether you're flexible, it's really my way or the highway. You're not able to test it out. So those things really matter to us in general. And of course, the bite size, valuation, all that, whether they're realistic, and what value we are bringing to the table. For us, it's really important. We work alongside the founder. We like that journey. We're not hands-on, but we love being able to add value where we can. So all that.
I see. Okay.
And very same things for us as well. I mean, we can keep drilling on it. And more important is that this is not, again, one size fit all. It's not, we can't write a book or a PhD thesis on this. This is all about calibration process. This is all about your feeling in the gut. And if I may go back to anatomy, I think it has been clearly proven even in medical science that gut controls our whole health and the body, including our mind. So finally, it's a lot of gut feeling that comes from the broad parameters, even what Anisha just alluded. These are the basic things. Particularly, we give a lot of emphasis on that founder stuff. I mean, why are you a founder? Why are you doing what you're doing? And what do you know of this space that you think you will be successful? Do you have any hard skills? Are you even taking a pot shot at a hard problem, or you're trying to solve just mediocre or a miniature problem where there is no defensibility? Even if you are the first mover, the moment you do it, everyone else will come in drones. So those are the kind of things. I mean, again, this is something. If you want, one has to learn, one has to be part of our journey to be our LPs. And that's where we give them the ringside view and the fireside chat. So this is not about return of capital or return on capital just. It's much more than that. It's all more about investing as a LP in a boutique VCs like Anisha's, like mine's, so that we can from here, the investors get to learn, get to see what all coming their way that will change their life and livelihood, and what all skills that they need to retrain themselves to be relevant in this world. And if you can do these two things well, obviously the return of capital and return on capital will automatically fall in place. It's not a conversation of, listening just to a few podcasts and YouTube videos and reading a book or two from the library.
So yeah, we're excited about what we're building. I love what you're building. So definitely, we're going to keep in touch after this.